Hey everyone, it's Tuesday, December 13th. Today on the Final Bar, we're talking with Sean McLaughlin from StockCharts. We'll get some of the charts that he is looking at with the team at StockCharts. We'll also look at this market opening much higher, closing back where we started. Ladies and gentlemen, this is the Final Bar. Hey everyone, welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the best practices of technical analysis. The technical toolkit, as I was taught it, was meant to help us understand investor psychology. Investors are irrational. You've probably seen that in your own decision-making at times when you take a step back and reflect on some of the buy and sell decisions that you've made. The markets themselves are irrational, and there's no way you can convince me otherwise. On days like today, when you see sudden movements, you see extremes of optimism and pessimism from 1 hour to the next. The market's gapping higher in a big way today on the latest inflation data. This is setting the stage for the Fed meeting tomorrow. We have a lot of charts to look through, but the main one is probably going to be the S&P 500. Just thinking of this phenomenon where the S&P opens above the key level, the key line, the key trend line that we've been focusing on and now others have been talking about as well, only to close right back below that level. So if you were looking for some sort of closure, some sort of bullish blanket to wrap yourselves in to feel better about yourself going into the Fed meeting, you didn't get it. But we do see a lot of movements and a lot of signs of optimism that we'll share with you, and also signs of potential concern. A lot of charts to review. Excited about today's guest, Sean McLaughlin, who always does a fantastic job sharing some charts and some strategy to make sense of things. Tomorrow on Wednesday, we have Sam Burns, the chief strategist at Mill Street Research in Boston. He's going to help us navigate the Fed meeting, sort of debrief on what we heard from Chairman Powell and how to look forward into the first quarter of next year. On Thursday, the 15th, Hema Reddy is going to join us. She's an expert in Gann and Fibonacci analysis and using a number of tools that I don't use very often in my own strategy. So always interested to see what someone like her can share in terms of their conclusions given their toolkit. Then we were going to be off of our live programming for the last 2 weeks in December. Most of StockCharts TV is sort of is going on vacation. We're taking time to reset, get ready for the new year, but we will be putting together a special series called the top 5 charts of 2022. So starting next Monday, every day, we will reveal one of those charts, talk through what it is, what it means, and how you should be thinking of them going into the new year. Let's continue on our show today with the market recap. Let's talk about what's happened and what we can learn from it. Again, sort of a crazy day today with a higher open, still finishing the day closer, but it's hard to have a warm and fuzzy feeling after you saw the action through the course of the day, because that gap higher to S&P 4100 was the high watermark of the day. From there, it was more about retracing back toward yesterday's close. Looking at the S&P, finished up about 0.75%, just below 40.20. So staying above that 4,000 level, which could be notable. Right after lunch, right around the lunchtime hour, we touched 4,000 briefly before that ended up being the floor for the day. And that's really right about at yesterday's close as well. The NASDAQ composite up 1%, the VIX moving back lower. We've talked about how that VIX bouncing off of the 20 level, pushing higher than yesterday. It was up above 24. Certainly a change of character in terms of volatility, pushing to the upside. Actually closed the day at 25 yesterday. So back around just around 2270 to finish the day here. Looking at other asset classes, bonds moved higher through the course of the day. 10-year yields down a bit to 350. Long bond yields around 353. The dollar index moving lower as well. So when you think about what allows stocks to move higher, arguably one of the biggest stories, and I, as a preview of one of what I'm sure the top 5, I haven't gone through all 5 of them yet, but I'm quite certain one of them will have something to do with the dollar, because that has been one of the most important things to watch. The strength in the dollar through most of the year how that changed in the last 6 to 8 weeks and what that does in terms of giving room for risk assets like equities, even gold to move higher because the dollar is actually starting to weaken a little bit. Also for markets like Turkey and others, developed European markets. Now, one of my premium members of Market Misbehavior was asking me about France, and we talked about the charts of France, Spain, the UK, Germany, all sort of rotating out of bases as well. And again, the weaker dollar allows that to happen. It gives room for those international markets to do a little better as well. Commodities, we're going to talk a little bit about commodities with my guest today, Sean McLaughlin. So just briefly, the GLD and the SLV, the two main gold and silver precious metals ETFs that we track, both up about 1.7% today. Commodities as a whole had a pretty decent day. Energy prices moving higher as well. For the most part, the commodity complex doing just fine today. Also, cryptocurrencies, right? Bitcoin up 3%. Ether up 3.33%. Bitcoin was down below 17,000 yesterday, powering to the upside. Didn't quite make it to 18,000, but these are numbers we haven't seen in a little while for something like Bitcoin. Could this be the beginning of a broader recovery in cryptocurrencies? I would definitely not be prepared to make that conclusion on one day's trading, but let's recognize the short-term strength that we're seeing out of the recent lows. Again, the most bullish thing that a market can do is go up. So make that simple analysis of, is this thing going up higher or lower? And I think on Bitcoin, that longer term time frame is still arguably lower, but strength on days like this and strings of days like this is what allows the recovery to actually play out and turn into something maybe a little more meaningful. Let's spend a little time with the chart of the S&P 500 because it took an interesting turn. And what's so funny, and this is just the nature of doing a closing bell show, not that my life is that hard, but it has its moments. And I would tell you this morning, as I'm driving into the StockCharts office, it's around, 8, we'll call it 7 a.m. Pacific time, around 10 a.m. Eastern time. So I usually work from the morning and then come in after the open. And, market moving higher, right? The S&P touching 4,100 and certainly powering above this trend line. So please don't tell the good police force here in Redmond, Washington. But of course, I'm bringing out my phone, bringing up StockCharts, trying to at a stoplight, trying to see what the chart looks like. So I'm thinking this means we're right above that trend line. And sure enough, we were. So of course, I'm doing a webcast a couple hours ago on risk management, talking all about stops, which seems like a really ridiculous topic when the market's ripping to the upside. What's great about these markets, though, is they quickly turn on a dime. That ended up being the peak. And by the time I actually get set up and I prepared to do the webcast a couple hours ago, the market's right back below that trend line. And not just that, we were back below the 200-day moving average. So a number of things to take away from this line. Number one, right, breaking above a level of resistance on an intraday basis is never enough. And I think that's fair to say, particularly as a long-term investor, that's not what you're looking for. You really need to be patient and wait for the close at least to give you an indication of what the overall, right? The closing price is important because that is at the end when all the votes are tallied, where have we gotten this market? And by then, sort of all the buying and selling that has to be done has probably been processed. And it's sort of a, where did we end up? And that tells you directionally from yesterday to today what happened. So on a closing basis update, right? The S&P up about 0.75%. So overall, that's positive. The second thing is when you have a big trend line like we've been talking about, we've been talking about this for quite some time because I think it's a really clear one connecting the January high, the March high, the August high. They line up really, really well. That also lines up perfectly with the high about a week and a half ago, 2 weeks ago, right? The end of November. From there, we pulled back and we rallied once again and now traded right up to that line, but closed below it. And what you will often find with moving averages, you'll find it with key trend lines, we will trade through that level, but then back away from it. And what that means is there's not enough follow through, right? The buying power, the excitement, the euphoria that got us above that trend line was not sustainable, meaning there wasn't this influx of additional buying power that would allow prices to go higher. So two things that you need to pay attention to, in my opinion. Number one, you need to close through a level before you can consider it broken. We've not done that. You also need to have some sort of follow through. And that's something I learned years ago from Tom DeMark, talking with Larry Williams. It's a concept he's had as well. Someone recently pointed out to me in one of John Murphy's books, he talks about a 2-day rule, which is day 1 is the break, day 2 is when you actually confirm it. I agree with all of those, very knowledgeable expert investors that have more experience than I do, all agreeing with that same concept, which is you need to follow through. And so I don't think we've gotten follow through on a day like today. What this day has done is confirmed once again the importance of this trend line. And we could be building up for a break at some point, but not today. Now, tomorrow, of course, we have a minor, incredibly market-moving potential event, which is the Fed meeting, particularly Powell's press conference. So I'd be watching that line and the chart of the S&P 500 during that event. Just briefly to finish our market recap, sorry, I didn't mean to soapbox it up on the chart of the S&P, but it had to be done on a day like today where we have all that movement. Defensive stuff at the top to a degree, with REITs at the top up 2.2%, followed by energy 1.9%. Then communication services with a decent day up 1.7%. At the bottom, both the consumer sectors is essentially unchanged today, with the consumer staple sector the only one in the red, consumer discretionary flat from the day. Financials up just 1/4 basis point. Higher rates are really one of those things you'd look for if you're optimistic about financials. Rates coming off today, not making it particularly attractive for the XLF and for banks in general. Let's take a quick commercial break. We'll be back with today's guest, Sean McLaughlin. We'll see you in a minute. Hey, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close as we break down the markets using the StockCharts platform and the best practices of technical analysis. A couple quick announcements before we bring on today's guest, Sean McLaughlin of All Star Charts. Want to remind you, we have a mailbag going. It's always open. We're going to do a mailbag segment a little later in today's show, and we'll do another one the end of the week on Friday's show. You can get your questions to us via email, thefinalbar@stockcharts.com. We're on Twitter at FinalBarSCTV, and we're on YouTube. Put a comment below the video you're watching on our StockCharts YouTube channel. We'll gather all those questions. Hope to answer one of yours live on the air on Friday's show. Also, go to StockChartsTV.com. We are so fortunate to have really knowledgeable guests like Sean McLaughlin, like Larry Williams, like Katie Stockton, like Javed Mirza from Canaccord, so many others coming through the Final Bar and on StockCharts TV every trading day. You can see all of their thoughts and their expertise for free at StockChartsTV.com or on your mobile device. Just search for StockCharts TV on demand. I want to welcome on today's guest, Sean McLaughlin. Sean's coming to us from Boulder, Colorado. He's the Chief Options Strategist at All Star Charts. Sean, welcome back. How are you?
I'm doing great, David. How are you?
I'm well. Thanks for coming in on I feel like all days, these days are crazy in terms of the market environment, but a lot of movement today. So thanks for helping us put things into a little bit of context. We're starting in the commodity space. Your first chart's a ratio, I think, of silver to the S&P. Can you talk us through this one?
Sure. So this chart hits on two things that we harp on a lot at All Star Charts. This talks about from a chart pattern that we love. From failed moves come fast moves. You've probably heard that before, David. We saw a breakdown there, and this is a ratio of silver against the S&P 500, right? This is not the actual price of SLV. It's the relative price. And the other thing that we harp on is relative strength. We are always tracking relative strength. How are stocks performing relative to other stocks? How are sectors performing relative to other sectors? So when we look at a chart like this, we see that silver had this false breakdown against the S&P 500, and we're seeing what appears to be the beginning of what could be a dramatic outperformance. The team here is getting pretty excited about this one. This is a stock, and if you want to bring up the next chart too, it's not just S&P 500 that silver is outperforming against, it's also outperforming against other commodities. This is the CRB index, and it's even more dramatic when you look here. And this has us really thinking that we could be setting up for a big run, not only in relative terms, but also in absolute terms in silver. And, it's JC likes to joke, it's the silver is the poor man's gold. But in this case, it could be making us all some money.
Now, another space of the market, obviously, energy has been one of the key stories of 2022. Talk us through the XOP. How does that relate to the charts we've seen so far?
So the XOP is kind of a different story. It's a very different story, actually. We've had, as you alluded to, a very big move in gas, in the energy sector this past year. I mean, for much of the year, it was the only green sector, right? For a while, it was the only sector that was up. I shouldn't say green. That might get people a little tilted there. It was the only sector that was up for the year. And it's been a wild ride in both directions. And I feel like at least in the oil and gas sector, the ticker XOP, which is the ETF that expresses that, I feel like both bulls and bears are a little bit tired here. And we're going to set up for some continued consolidation within this area here. I got the levels highlighted: 115 at the downside, 155 at the upside. We here at All Star Charts, we are selling what's called a delta neutral credit spread, an iron condor. It's an options trade that benefits from sideways action and from decreasing volatility. And we think if oil and gas goes sideways for the next few weeks, which we think it will, then an iron condor type trade plays very well here.
It's such a great chart. I remember I was actually for some reason, I dug out, I don't know if you've ever read John Bollinger's book, Bollinger on Bollinger Bands, but sure. I read it years ago and I found it again and I was flipping through it. And it just reminded me of this play on volatility. And I remember sideways markets are often so frustrating for equity investors because there's not enough directional movement. But what you have the ability to do, if you have the right option strategies, to benefit from something that has a likely sort of sideways change, right? Which sort of Bollinger Bands are trying to capture. When you're looking at something like the XOP and maybe taking your example of an iron condor, what's the risk to that strategy? Is it just that we have a big directional move, or at what point, what would you see on the chart that would tell you, okay, this is something different and we need to reevaluate that kind of play?
Well, you hit on it with the risk part is there is risk, right? It's a defined risk trade, though. An iron condor is where you're selling an out of the money call and an out of the money put, but then you're purchasing further away calls and puts to protect the position to define the risk. So right. XOP can go to 0 tomorrow, and I know the absolute most I can lose, and I'm comfortable with that. That's one of the nice things about an iron condor trade. Now, as far as where I'm wrong, I've got the levels highlighted here on the chart. If we see a closing price, by the way, I love to hear you riff on closing prices. I too subscribe to I only act on closing prices. So for me, if we see a close above 155 or a close below 115, that's my signal that my thesis about range bound trading is wrong, and I'll want out, win or lose, most likely a loss, but it'll be a manageable loss at that point.
I love that idea about clearly defining risk and clearly defining downside. I think that's a great way of thinking about this. We only have about a minute left, Sean, but I'd love to ask, obviously we have the Fed meeting tomorrow. We had inflation today. And again, when you're looking at this market using your toolkit from a technical perspective, how do you think of days like tomorrow? How do you approach something like this where you have a big sort of one-off dramatic potential for move? How do you stay centered, I guess, or how do you navigate this sort of market when there's so much uncertainty tomorrow?
Well, even going back to yesterday afternoon, and I'm not the only one who noticed this, but people were talking about how the VIX was up something like 10% while the S&P was rallying hard. And that's not something you see very often. So that definitely raised my cackles that something was up. Did I know what happened today was going to happen? Of course not. But I feel like the big gap that we had today, followed by basically closing at or near the lows, that may have taken a lot of the starch out of the market. Maybe tomorrow's event ends up being kind of a ho-hum, big deal. Not a big deal. But of course, I reserve the right to be wrong on that. But I feel like today took a lot of starch out of it. Could have taken a lot of starch out of the market participants here.
And it very quickly could have looked like this dramatic bullish sign going into the meeting tomorrow. I feel like we're left with question marks. If we didn't have them before, I feel like we have them once again. Sean, listen, it is awesome to have you on as always. Thanks for talking through some of the charts with me. Be well. Happy holidays there in Colorado. We'll talk to you in the new year, okay?
All right. Thanks, David. Be well to you as well.
That's Sean McLaughlin. Sean's the chief options strategist at All Star Charts, coming to us from Boulder, Colorado. And I love how he was talking about some of the charts. Again, when I talk with guys like Sean, some of the other options experts that we bring through, I often write down on a piece of paper, need to think more about how I'm allocating to an option strategy in my own investing, because there are so many other levers that you seem to be able to pull as opposed to being a plain vanilla equity investor, right? Because you have one choice. Do I want to own this or not? With options, you have a lot more flexibility and clearly defined risk, which talk about something that would be really helpful in a year like 2022 is clearly defining your list, limiting your losses, and also maybe more clearly defining your potential gains as well. Great take there, as always, from Sean McLaughlin of All Star Charts. We need to continue on our show today with our next segment, The mailbag, the Final Bar mailbag. As a reminder, it's always open. Email is the best way to get your questions to us. thefinalbar@stockcharts.com is the best way to get your questions our way. And let's get to question number one. I'd like to chart the Qs plus the SOXX, which is a semiconductor ETF, plus the XLY consumer discretionary to see if the growth sector is going up or down as a whole. Can we do that on StockCharts? That's such an awesome question. The short answer is no, you can't do that yet. The somewhat longer answer is yes, this is a notable area where we're building out our platform going into the new year. We have our Kameno release coming up this week and next week, which we'll be announcing very, very shortly. It has some really cool functionality. This particular thing is on our list. You do have some limited ability to put in ratios and relative things. And I'll tell you what you can do, which is at the top where you can enter the ticker. Obviously, you can just enter one ticker if you want. You can also do one, back at the top here, you can do one ticker colon, and then the second ticker that'll automatically do a ratio, just one versus the other. You can also do a minus sign. So you could say SQs minus SPY, which is probably not something you'd want to do that particular thing, but something like two interest rates or something. You could do one minus the other, and you can do that. So you can do some of those simple mathematical operations, doing what you want, which is basically, I want to create my own little index with some of these things. No, that is not something you can do yet. Yes, that is something that is on our development list, and I cannot wait to tell you when that's going to be added. And that's not all. When you do that, that's actually a really simplistic way of doing it. We're actually working on some much more sophisticated things like custom benchmarks, where you can weight things and you can do a lot more flexibility in terms of defining a custom index. The other thing I would tell you, by the way, is what you can do, and the way we sort of help you get around that is if you can create some sort of data series in Excel. So for example, if you can download price data and then create your own index or create your own thing, right? Some way of tracking a custom benchmark or a custom list of stocks. We actually have where is it? User defined. I should know where this is, and I'm sorry I don't. It is somewhere in here. I'll get there. Wait for me. Here we go. User defined indexes. I was going to get there. If you go to user-defined indexes, you can actually import your custom things. So though I was doing a research piece at the beginning of this year on the Fed balance sheet, so I found a source of that data. I was able to import it into StockCharts and then include it along with all of my other charts. So if you do have the ability to get that data into Excel or into a CSV file, you can use our user-defined indexes to import custom data sets into StockCharts. And we've got more great plans for that functionality, which will allow you to do custom benchmarks more closely aligned with what you're asking about. Thanks so much for that. And trust me when I tell you, I have informed our developers. We have another request for that. Next question. John Kosar mentioned fund flows on your show. How does one determine if money is flowing in or out of an ETF or stock? That's a really good question as well. When I had John Kosar on, he often has talked about fund flows. He actually has a proprietary data set that he uses that's part of his research service, and he very kindly shares that with you guys, with our viewers, when he comes on the show. But it's something he uses often with his own research clients and in his own investing. There are two general ways that I have found, maybe three, to make that sort of assessment, which is money moving into or out of a particular thing. The first thing you can do is analyze price and volume, right? And maybe that's two of them. Price would be number one. Arguably, if you're looking at the S&P 500, if money is flowing in or out of an ETF, that's going to be reflected, obviously in terms of the structure, it might be different things, but usually the price is going to reflect that additional demand and or additional supply, right? And that's what really drives movements in asset prices. It's whether buyers are outweighing sellers or sellers are outweighing buyers, or put in other ways, supply versus demand, and which outweighs the other. So one of the simplest ways to see if demand is outpacing supply is if the price is going higher, sort of economics 101. And I would argue that the price of an asset is one of the best indicators of investor psychology, right? And sort of the motivation of buyers and sellers. Now, an additional thing we can do is apply volume data. And that might be the second thing I would suggest to you, which is, basically including volume as an overlay. So if you see the market making a significant move, is there additional volume that would indicate an influx of new buyers or an influx of new sellers, right? A stock or an ETF gapping down or gapping higher on an exceptional amount of volume tells you what is happening, right? And you can imply or you can infer what is actually driving it. So with price and with volume, you're making more inferences, right? You're taking the available data and trying to affirm it. Now, there are sources that actually directly look at fund flows and looks at creations of redemptions of different things, whether you're looking at a fund or an ETF or an exchange traded product or a trust, depending on the structure. The one I've used is ETF database, etfdb.com. We've looked at fund flow data, and it's on our list with our data team to evaluate. We have other things that I think are a little more important at the moment, particularly expanding our options data, which is a teaser of something coming up in the next week. We'll be telling you about our new options database and options, the beginning of our new options analysis tools we'll be building into next year. Futures and commodity and currency data, which I'd love for us to build out, which are also working on as well. Fund flows as well as on the list. Next question, on hourly charts, do you prefer looking at just market hours or extended hours too? Do extended hours bring unreliable volatility into the picture, or does it offer helpful insight? And yeah, earlier in this week or last week, I forget when, I featured an hourly chart of the S&P 500. I don't look at a lot of hourly charts, and I rarely share them on the show only because we've got a lot of, I'm more of a long-term investor. I'm thinking more about time frames sort of beyond the hourly and less. But I thought it was an interesting chart to sort of talk about the dynamics and what we might be seeing in the last couple of days. You'll notice on the charts below there, you can actually bring in extended hours. I literally never select that. We have the data available, and I would say if you're looking at a shorter term time frame and you're trading intraday, bringing up extended hours, particularly on ACP, which is a dynamic live charting platform, that could be really, really valuable. For me, the trading session is the normal trading session. The normal trading hours are by far the most important. I think the extended hours can be really helpful, particularly when there's news flow, particularly when you see earnings and that sort of thing that happens outside of the normal trading hours. But in terms of tradable signals and indicators, I would argue putting extended hours on here, there's a lot less volume and a lot less liquidity. So your MACD or RSI or moving averages are going to be very affected by a period of time, those after hours, which are not as liquid. So I would probably say a strong argument against using that, particularly if you're using indicators. I like to see short-term reactions to news flow. That's the only time when I tend to check that box. Great questions as always, and keep them coming. We'll get to more of them at the end of this week, but we need to wrap the show. Let's go to the 3 and 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I tell you what, I keep highlighting this indicator because it's one that I followed for a long time, and it has become very confusing, to be honest with you. The bullish percent index for the S&P 500 keeps fluctuating above and below this 70 level. Generally speaking, above 70 is called a bullish confirmed, meaning you have a confirmed bull market phase. 7 out of 10 of the stocks in whatever universe you're looking at are in a buy signal according to their point and figure chart. That's a bullish sign. We went above 70 here the second week in November. We briefly almost dipped below it, but didn't. Around the Thanksgiving holiday, about a couple of days ago, we finally got below 70, and I made a point of saying this all of a sudden looks very similar like the previous peaks in 2022. Something funny happened today when you have the gap higher on the inflation data. Again, we closed a lot lower than the initial hour of trading, but a lot of point figure charts registered their buy signal when we're back above 70%. So all of a sudden, this looks very different than the other signals so far in 2022. Still, obviously, paying close attention, and I would encourage you to do so as well to see how this plays out over the next couple of weeks. Chart number 2 is the communication services sector. Decent day today, kind of a stronger day, up 1.7%, outperforming the S&P, which is up by about half that percentage-wise today. But what was interesting on the chart of the XLC, this has obviously been a tough year for communication services, right? Consistent downtrend of lower highs and lower lows, relative strength that has been in a free fall in a lot of ways since last September. So 15 months in, we're still making new lows on a relative basis pretty much every month since we topped out last September. But we're potentially reversing, right? You sort of moved higher. We're putting in a more of a basing pattern here around 49.25. That's right where the 50-day moving average is. We also have clear resistance at 52. We gapped higher, traded right up to that resistance level, and traded lower. XLC gets above 52. I think that could be a really compelling signal, but not quite yet. Finally, there are stocks everywhere on any given day breaking out to new swing highs and breaking down to new swing lows. I'll highlight PINS, which has been one of the poster child stocks for the, sort of Zoom, Peloton, PIN sort of rally out of the COVID lows, having a rough year in 2021, starting to improve, getting above resistance, which is impressive. Folks, that's a wrap for the show. Thank you so much for joining us every weekday after the close. Special thanks to Sean McLaughlin from All Star Charts. For Stock Charts, I'm Dave Keller. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.